Many people think that what is happening in the Middle East is only a regional issue. But in reality, it can affect the global economy, and it can do so quite quickly. To understand this, it is important to look at how the global economic system actually works. The Middle East is one of the most important regions for energy, and a large share of the world's oil and gas moves through this area. One of the most critical routes is the Strait of Hormuz, a narrow passage through which a significant portion of global oil supply passes every day. When this route becomes unstable, even partially, it creates immediate uncertainty. It does not need to be completely closed. Even small risks are enough to change behavior in the market. Shipping companies become more cautious, insurance costs increase, and some vessels delay or avoid the area entirely. As a result, the supply of oil becomes less predictable, and when supply becomes uncertain, prices begin to rise. This leads to the first major impact, which is higher energy prices. When oil prices increase, the effect spreads quickly across the economy. Transport becomes more expensive, production costs increase, and energy bills rise for both households and businesses. This happens because energy is a fundamental input in almost every part of the economy. However, energy is not the only issue. There is also the question of global trade. Another key route runs through the Red Sea and the Suez Canal, connecting Europe and Asia. A large volume of global trade passes through this corridor. When it is disrupted, ships are forced to take longer routes, often around Africa, which increases both time and cost. As transport costs rise, companies adjust their prices, and these higher costs are passed on to consumers. This creates the second major impact, which is rising inflation. At the same time, many economies are already dealing with inflation from previous shocks, and interest rates have been relatively high. Consumers are already under pressure, so an additional increase in prices makes the situation more difficult. When households spend more on energy and basic goods, they reduce spending in other areas. This affects businesses, slows revenues, and leads to more cautious investment decisions. This creates the third major impact, which is slower economic growth. There is also another important factor, which is confidence. Financial markets react strongly to uncertainty. When energy supply is at risk and trade routes are unstable, investors become more cautious. This can lead to increased volatility in stock markets, pressure on currencies in some countries, and tighter financial conditions overall. It is also important to understand that the impact is not the same everywhere. Asia is particularly exposed, as countries such as China, India, Japan, and South Korea depend heavily on energy imports through this region. Any disruption affects them directly. Europe is also vulnerable, not only because of energy prices, but also because of supply chains and trade routes. For oil exporting countries, the situation is more complex. Higher prices can increase revenues in the short term, but if transport or production is affected, those benefits can quickly disappear. As a result, the effects of this situation are global, but they are not evenly distributed. The key question is what happens next. There are several possible scenarios. If the situation remains limited and shipping continues with some adjustments, the impact may be manageable. Energy prices may rise but stabilize, and economic growth may slow without collapsing. If disruptions continue for a longer period, the effects become stronger. Higher costs remain in the system. Inflation stays elevated, and economic growth weakens further. If the situation escalates significantly, especially if major energy routes are seriously disrupted, the risks increase sharply, and the global economy could face a much more serious shock. What matters most is not only how severe the situation is, but how long it lasts. Short disruptions can usually be absorbed, but longer disruptions begin to change behavior across the economy. Companies adjust prices, consumers change spending patterns, investment slows, and confidence weakens. Over time, these changes can become structural. For this reason, this is not just a regional issue. It is a global economic risk. Energy, trade, inflation, and growth are all connected. And when they are affected at the same time, the pressure on the system increases. The situation is still developing, but the direction is clear. If instability in this region continues, the global economy will feel it, and the longer it lasts, the stronger the impact will be.